Have you ever thought about buying a car just to have the car salesman or the finance department tell you that you don't qualify? Or maybe have you ever, thought about buying a house, go look at a house just to have a lender tell you that you don't qualify because your credit's too low? Well, that's what we're going to talk about today. Credit is a really important thing in our American life, and we need to understand what makes up credit, what is credit, and how we can improve it. My name is Brian Mullins. Today, that's what we're going to dive into. We've got a lot of really important information to give you. Make sure you drop us a like, give us a comment, let us know that you like it, and also hit subscribe because we're going to have lots more videos coming out just like this. So first, let's talk about what a credit score is. Essentially, a credit score is a qualitative number that is defined of what your credit worthiness is. Why do we have this? Well, if we look back through American history, we see that banks are making the decisions locally. That's where everything is happening. But the problem is you're not getting a fair shake for everybody. So one person may have a really good relationship with this banker and they get a loan, and this other person who may be actually more qualified doesn't have a relationship, they're not getting the loan. Essentially, this takes all that out of it. It assigns a score, a qualitative number that you can look at and know what your score is. So we can date back credit scores to the mid-50s is when we started seeing this pop up. The most common credit scores now is called FICO, and that stands for Fair Isaac Corporation. That was actually created in 1989. So not really that long ago, but it has very much taken over all credit in the United States. That credit score is going to be based upon 3 different credit bureaus. Those 3 credit bureaus should have a fairly similar score, but not always. So some companies will just report to 1, 2, or all 3 of the credit bureaus, but if they only report to 1, you may have negative mark on 1 and then not have negative mark on the other 2, or vice versa, or any combination therein. Now that you know the history of credit, let's talk about how it affects your everyday life. So let's say that you are young and you want to make your first big purchase, a car. That's pretty typical. That was my first big purchase. Sometimes it can be really hard to get approved, but the question is, why is that? So I'm going to use an analogy. So I've got a cup. We're going to say this is you. So this is where you start. This is a 0 credit score. This is a good credit score. This is, 750, 800. That's about as max as they go, depending on the bureau. If you're young, your credit score is going to be at 0. If you go in with nothing, with no experience, you're going to not be able to really buy anything because your credit score is 0. But here's the good news if you're young. It's actually really easy to move your credit because this cup is empty. This cup is light. So I can take this cup and I can scoot it. Hopefully not knock it over, but I can scoot the cup and I can push it up a little bit. I can push it up without much effort, simply because there's not a whole lot weighing it down. So that's where you start off whenever you're young. You will have a hard time getting qualified and you may need a cosigner. But if you start having good credit, you can most certainly push that credit score up. Now let's say you're older. Let's say you're in your 30s, 40s, 50s, and you started off with no credit, and you just didn't give a flying rip about it, and you didn't pay your bills on time. You are filling up your cup of credit history. You maybe had a car repoed, all that stuff. Well, now you actually have something that they're basing you off of. So in the last segment, we talked about how easy it was to move. Now I have to carefully move this. It takes a lot more force to move this credit score up or down, but we're gonna say if you're low. So it's gonna be a lot harder to move this credit score up whenever you've got all this baggage, all this bad history that is in your credit. So that's why whenever you are older and you have bad credit, it's harder to move. Now this also works the other way. Let's say you're like this and you have filled your cup up with good credit. You've made all your payments on time, you don't have any collections, you don't have any medical bills past due, you have nothing. It's harder for your credit score to go down. Same thing, because if you maybe miss a payment one time, it's not gonna plummet your credit score completely. So you've built up that history. So if you have bad credit, you've got to do a lot of work to get it pushed up. If you have good credit, you got to really try to push it down and make it bad again. So it's really important that you understand what you're putting in your credit score cup. And our analogy here is good, because it will make it where it stays good and it's good for the rest of your life. So here's a little tidbit that you can use, especially if you have kids and you want to get your kids started off on the right foot. My parents did this for me. It was kind of an accident, but it worked out really well. Here it is. Add your kids as a authorized user on your card. Have them with an additional card. You know, if you have a credit card, you can add your spouse on because it's tied to one person, but you can add your spouse on. If you have a business card, you know, you can add all your employees on. You can also add your children on. So it depends on the bank. Some banks have different rules. At least by 13, you can add them. On most banks, there's a couple that won't let you do it till they're 15 or 16. So you can check with them if you have multiple credit cards, maybe check around and see what you can do. This may seem weird, but what does it do? Those authorized users actually get that on their credit report because they are the ones spending the money. So every time you make a normal credit card payment, and they don't even have to really use the card, you can be the one using the card, but every time that payment that you make goes on there, it's actually building their credit. So if you start a kid at 13 years old and they're not buying a car until they're 18 because they can't anyway, but that is building their credit up. They've got 5 years of solid credit history, as long as you're making your payments on time, that they are going to rely on. And so with our analogy of the cup, their cup's not going to be completely empty. Their cup's going to have some credit history in it. And you're going to start them off on a really good foot, and they will be able to easily qualify. So let's go with the age ladder a little bit. So if you have young kids, we're going to use them and get their credit score built up. Let's go up a little bit. So let's say you're 18 to 25 years old, you don't have any credit. What's the best way to get credit right now? You could always have your parents still add you on their credit card. That's not going to hurt. That will definitely start adding to you. But you're now of age, you're 18 years old, and you can actually start doing some purchases and some acquisitions and some adding credit history to your own credit. So what I would do, the first and easiest way is a secured credit card. So essentially you put money down and then the credit card lets you borrow against your own money and then you pay it off. And so you keep on paying it off. That will quickly build your credit. They're not going to give you a ton of money. It's probably going to be $500 and they're going to make you put $500 up front. There's absolutely nothing wrong with that. You don't have to do that for very long, 6 to 12 months before you're going to start seeing your credit score go up quite a bit because you're showing that you can make those payments. Just go and put, your gas, your groceries, whatever, pick something and put it on that credit card. Let's move up the age ladder a little bit. You're older, you've got really bad credit. What do you do today? Well, that's a tough one because it really depends on what's wrong with your credit. If you had a bankruptcy, sometimes you have to wait. But if you just in general have bad credit because you haven't made payments on time, we have to start getting that corrected. So obviously the first thing is make your payments on time. No more late payments. Pay the minimum down. I do like what Dave Ramsey calls the debt snowball. If you have a bunch of credit cards, let's make the minimum payments on the higher balances and the higher interest rate ones and take those smaller balances and hopefully lower interest rates and start paying that one off. Pay as much as you can to pay that one off, and then once you get that one paid off, go and add the second one and then snowball it and go and add the third one. Pay off all your credit cards. That will drastically improve your credit. If you have a bunch of collections, negative marks on your credit, we want to get those taken off if we can. Now, as my mother would always say, you get more with honey than you do with vinegar. So I'd call the creditors and say, hey, I'm really trying to rebuild my credit. What do I need to do? 1, maybe you make a payment arrangement with them. 2, maybe you can get a reduced payoff if you have a balance. And even if you don't, call them and say, hey, what can I do to get this taken off my credit? Most of them understand. If you are reaching out and showing some effort, they will actually try to get that removed from you. And if you can get some of those removed from your credit, that will drastically increase your credit score too. So it's not an easy process. It is a very slow process and you have to really try. But your goal is to reduce your credit card balance to nothing, essentially, only having a balance and paying it off every month. So getting rid of all your credit cards, getting rid of all your collections, paying them all off, calling to negotiate. I can tell you from experience, I worked in collections for 10 years. They will negotiate down if you can bring them a lump sum. That would be a great way to do it. But pay off everything, pay attention, and never, ever, 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 ever make any late payments. So you can rebuild your credit, it just takes a little bit of work. I know we've gone into a whole bunch of stuff. We've talked about credit. We have barely touched the surface of what credit is and how much work it goes into this. So we've got other videos. We've got a video breaking down of what a FICO score is. We've got other stuff coming out. So make sure that you subscribe, like this video, comment, so we can help get this out to other people. It is really important to have a good credit score. This affects everything in your life. And what some people don't even realize, some big employers actually pull your credit for you to even get a job. So you don't want your low credit score to affect your life, because it's going to affect you in a lot of different ways, not just your ability to go get a car loan or a credit card. It can also affect your ability to get a really good job. So make sure you subscribe, check us out, and we appreciate your time. Have a good day.